Hey everybody, Smart Silver Stacker here. Let's talk about what we've been seeing happen with the silver and gold price over the past couple weeks. Had kind of a rough week. Gold was well under the $1,800 level, and silver had a little bit of a hit there. Got taken under the $22 level, was there for a while. And this was amidst news of the highest inflation that we've seen since 1980. You know, the other day we got the CPI year over year for November at 6.8%, which is the highest since 1980. And that was a time when we were having significant inflation. You'll often hear the 70s and the early 80s referred to as a period of stagflation. 6.8%, I think that's about as bad as it got in 1980. I don't know the exact number for that, but I know that you have to go back that far to find a time when we had inflation that was at the level that we're currently experiencing it. And of course, I do think it's important to keep in mind that the inflation, level of inflation that we're having right now is actually significantly worse than it was in 1980. And the reason I say that is because the methodology for calculating the CPI has been revised several times since then. We've had things added in like hedonic adjustments and substitution for products. Housing is no longer really included in the CPI. Instead of home prices, they use owner equivalent rent, which is just some strange figure that they kind of cook up via a survey, I believe. And all of these changes have been designed to understate inflation. So when you look at a 6.8% CPI in 2021 compared to a 6.8% CPI in 1980, you're not really comparing apples to apples. The inflation today, if you calculated it the way that we did back then, it would definitely be in the double digits, significantly worse than back then. And anybody who is out shopping at the grocery store or buying fuel for your vehicle, I mean, you feel this in your pocketbook. You know that the dollars, the fiat dollars that you have, are losing purchasing power at a rapid rate. And this is not really shocking. I mean, they've printed 30 to 40% of the currency supply just over the last year and a half. There's been tons of money created, and this is the predictable effect of that. It's not like I'm the only person who's been talking about this. Plenty of people out there understand how fiat currency and inflation work and have been warning about this. And this 6.8% CPI, this is still just the tip of the iceberg as far as I'm concerned. You know, back in 1980, last time we had this inflation, we did manage to get it under control. We had Paul Volcker come in, the chairman of the Federal Reserve, and he cranked up the federal funds rate to almost 20%, and that did manage to rein in inflation. But despite what Jerome Powell may say, I don't think that the Fed has any ability to get this inflation under control, because there are some very significant differences between now and 1980 and the U.S. economy. And this time around, I think the Fed is just going to be hopelessly lost. And it is strange the way prices have been working. We got this 6.8% CPI print, and silver and gold kind of took a hit on that news, which was odd. You would expect assets that are supposed to be inflation hedges to rise on inflationary news. And then yesterday they finished up the FOMC meeting, the Federal Reserve, and Powell's talking about accelerating the taper, getting the lift off in interest rates even sooner. And then you see the markets and the price of gold and silver rally, and I don't really know what's to account for that. I mean, a lot of the short-term price movements in markets, I think, are just noise. They don't always behave rationally. Over the long term, prices and markets will behave rationally, and inflation will lead to higher prices in precious metals, gold and silver, as well as other commodities. But in the short term, we may see pullbacks like the one we've had. I mean, silver today popping up a little bit over the $22 level, but even at these prices, I still think that silver is just an incredible bargain, and this pullback is nothing more than an opportunity for us to load up. Maybe the last one we'll get. I mean, it's hard to say. Silver could go lower, of course. Right now, after the pullback, the gold to silver ratio is up over 80, which tends to be a pretty good buy signal for silver specifically. But back in March of 2020, that ratio got as high as 120 when silver dropped down under 13 bucks. So, there is the possibility that precious metals could drop lower. But of course, I would just view that as an even bigger opportunity myself. And none of this is investment advice. You guys know that. I'm just kind of telling you my thoughts on things. The idea that the Fed is going to be able to get this inflation under control, I think, is naive at best, because there's a lot of differences between now and 1980, and one of the biggest differences, well, I might say 29 trillion differences, is the U.S. national debt. We've got a national debt of $29 trillion. Our debt to GDP ratio, and of course GDP is a flawed metric, but people tend to use it, and we'll just go ahead and use it for today's video for the purposes of discussing the debt. We've got a debt level that's 125% of our GDP. Back in 1980, the debt to GDP ratio was actually under 35%. So we had much, much lower debt levels back then. And that has a lot to do with the Fed's ability to raise interest rates, because with so much crippling debt levels, these extraordinarily high debt levels in the U.S., every point that the Fed raises interest rates is a tremendous amount of additional interest that the U.S. has to pay on that debt. And if you've got a 35% debt to GDP ratio, you can afford to crank up interest rates a bit. But with $29 trillion and 125% of our GDP in debt, if you start cranking up the interest rates too much, pretty soon the debt service, the interest payments on the national debt, it becomes the single biggest item in terms of the U.S. budget. Only a few points up in the interest rate, and it quickly becomes the absolute biggest item on our budget. So, I don't think that the Fed is going to have the leeway to manipulate interest rates the way they did before. And the debt, of course, is still just growing. We're running massive deficits. It seems like we're just getting started. And if you want to find a time when our debt to GDP ratio was this high in the U.S., you've got to go all the way back to the end of World War II. And some people will say, well, they had a debt to GDP of about 124, 125% after World War II, and they were able to get it under control. But you got to keep in mind, that was at the end of the war. That was when all the spending was done. They were finished. They could rein in the spending. They were no longer financing a war in two theaters. They weren't fighting in Japan. They weren't fighting in Europe. The troops were coming back home. They didn't have this enormous bloated welfare state and federal government that required all of these, all this constant input of cash. So they were able to rein in spending and get the debt to GDP ratio back down. As like I mentioned, by the time 1980 rolled around, they had gotten it down to 35%. But I don't think that we really have the ability to rein in spending any longer. I mean, it looks like it's only increasing. We've got these infrastructure programs, we've got entitlements. There is absolutely no political will to rein in the spending, and I don't think there will be until it is too late. The path we're going to go down is one of hyperinflation. It seems increasingly likely that that will happen. And I used to think that, we were going to get a lot of inflation because there was all this currency creation going on and, the government couldn't get spending under control. But I always thought hyperinflation was, at least sort of at the extreme end of the spectrum of what was possible. But when I see the developments occurring, inflation picking up and the Fed sort of paying lip service to the idea of increasing the taper and raising interest rates faster, but no one's talking about the debt levels and how that's going to affect things. Of course, Janet Yellen actually did mention in congressional testimony about the debt ceiling, I think it was back in October, she basically said that the interest on the national debt would remain serviceable as long as our low interest rate environment persists, and she just kind of seemed to take it for granted that that environment would persist. What if it moves up? What are we going to do with the national debt then? The only way that we're going to be able to pay off the national debt is if a lot more money gets created and the value of that debt declines because the value of the dollar declines. When you have crushing debt levels like this and massive deficits where you're seeing the debt rise every year, really the only way to effectively pay that off is going to be to pay it off in devalued currency. And that has traditionally been what has occurred with empires who experiment with fiat currency and who devalue their currency and who spend a lot more than they bring in terms of taxation. Because, of course, taxation is unpopular. It's hard to get anybody to raise taxes in Congress. They just want to spend the money. They don't want to impose the taxation on the populace. But the downside of that, of course, is that we all end up being taxed through inflation, through all of our savings and the currency that we earn. It all goes down in value. So inflation is a hidden tax. There's no magic way to get things for free. You're going to pay for them one way or the other. And if all of these programs and all of this spending can't be financed via taxation, it's going to be financed via inflation. At least that seems to be the path that we are on. So unless you start hearing people in government talking about reining in spending and austerity, being concerned about the debt, which you don't hear ever really from any politicians, it seems, these days, from either side of the aisle. I mean, maybe people on the right pay a little bit of lip service to it, but they still sign on to all the spending bills. You know, until we see that happen, I don't think that inflation is going to go anywhere, and I think it's going to get much worse. And really, I am personally viewing the pullback that we've seen in silver and gold and precious metals as an opportunity to get some more. My only real regret is that I just don't have more dry powder. I don't have more cash to put into precious metals at these prices. Like I said, this isn't investment advice, guys. You guys got to do your own homework, do your own diligence. That's extremely important. But when you start to look into the national debt and the way they calculate inflation, and when you look at what's happening with home prices, with gas prices, with food prices, with prices across the board, and you start to notice these shortages in the economy and just these weird distortions, you know that something is going on. Now, why is the price of silver so low? I don't know. I don't know if it's that mainstream investors just think that the Fed has everything under control. I mean, that could certainly be part of it. I think that if you go ask the average person on the street still to this day, they're not going to be able to tell you what the national debt is. They're not going to be able to really define inflation for you. They're not paying much attention to it because a lot of us, in terms of the way the economy works and what we've been taught about money and the economy, we're pretty dumbed down, you know, and I don't think that that is by accident. I think that we are intentionally indoctrinated into thinking that things can come from free from the government, nobody has to pay for them, fiat currency is fine. Although, you know, a purely fiat world reserve currency is a pretty short experiment as far as history goes. It's only been since 1971 that the world has been on a purely fiat standard. So 50 years in the scheme of things is not that long. And I think it's very important to kind of get the normalcy bias out of the way you're thinking and realize that this system could collapse at any moment. You know, it's not going to take a lot of stress at this point with how leveraged up our economy has become and all of these crazy derivatives markets. You know, there's hundreds of trillions of dollars in derivatives that get traded, and there's a shadow banking system, and we know there's manipulation in the banking system as well. I mean, JP Morgan seems like regularly they're having to pay fines for manipulating the price of precious metals. You just do a search for JP Morgan and precious metals rigging on Google and you'll find several headlines. It's not like this stuff is even going on in the dark anymore. It's basically just happening in plain sight. It's going to continue until people decide that they don't want to put up with it anymore. But I don't know what form that's going to take. I have no idea what the future is going to hold for the U.S. economy at this point. I mean, it seems like the possibilities are getting more extreme as time goes on. So I will just say that I think it is important to prepare for the day that our economy stops working the way that we are accustomed to it working. I want to get my hands on some real physical, tangible money. And like I said, guys, I'm not telling you what to do with your money. I'm not telling you how to invest. But if all of your money is in digital assets and it's all in fiat currency and it's all, you know, just numbers in a computer somewhere, you might want to consider taking some of that and putting it into money that has been around for thousands of years, money that has stood the test of time, money that can't be printed out of nowhere. And it's funny when you get these short-term drops in the price of precious metals. I get a lot of trolls who come out in the comments or people who get discouraged. Look, if you've been stacking for a while, this is nothing to get discouraged by. Precious metals are a long-term hold. You know, when is the dollar going to die? When is the last day of the dollar going to come? I have no idea. It might not even be in my lifetime. Might be tomorrow. Could be 10 years from now. But I think that at this point, it's pretty much baked into the cake that $29 trillion in debt is unpayable unless you're paying it back with completely devalued currency. And I see no trend towards the U.S. getting its debt and spending under control. It seems like the Fed is just trying to keep the wheels on the machine as long as it can. And it may prove that they are capable of doing that for some time. Who knows? Years, decades? I don't know. I don't know how far this fiat money experiment can get pushed, what the limits of it are, but it seems to me like we're getting close to the end of the road. You know, one thing's for sure, in economics, things that aren't sustainable won't be sustained, and constantly borrowing more and more money to finance increasing levels of spending, it's not sustainable. Anybody knows that. Anybody with any common sense knows you cannot continue to simply borrow more and more and more money indefinitely. I mean, just take the analogy down to the household level. Imagine trying to earn $10,000 in a month and spend 15 and finance the difference with a credit card, and see how long you can do that for. It's not very long. I think that anybody who's got their eyes open realizes that the dollar's getting kind of long in the tooth, and any drops in hard assets should be viewed as buying opportunities. And like I said, silver could definitely go lower. It could go down to $13 again. If we get some kind of a crisis and everything sells off in tandem, it's likely that it will. But here's the thing, if that does happen, try getting physical for $13 or $12 or $11 or $10. It's not going to happen. There's no way that silver drops to $10 and you can go out and buy an American Silver Eagle for $10. These things will probably go up in value. I could see a day where you've got $10 spot price in silver, but getting your hands on an actual Silver Eagle, maybe it'll cost you $40 or $50. Who knows? It's not far off from the levels of the premiums that we currently have. So, don't just be buying an ETF and thinking that you're protected. I would want to get my hands on physical. So anyway, guys, let me know what you think. What do you think about the skyrocketing inflation here in the US? What do you think about the debt levels? If you can think of some way that we can pay off $29 trillion in debt without hyperinflating the currency, let me know in the comments below. I'd love to hear it. I can't think of any myself. Just for the numbers, $29 trillion in debt, it's kind of a staggering number. But if you want to break it down into a way that's a little bit easier to understand, that's over $87,000 per U.S. citizen. And that's like man, women, and child. You got a little baby that's born and all of a sudden he's on the hook for $87,000 basically. That's not the best way to break it down, because obviously children and a lot of citizens don't have $87,000 to fork over to pay off that debt. If you want to break it down per taxpayer, it actually comes out to $229,000 per taxpayer, which is an astronomical number. I mean, how many of you out there have almost $250,000 to fork over to pay for all of the spending that we've already spent? That's not even to talk about future spending. That's just the debt that we have, stuff we've already spent and already reaped the benefits from, and now that debt is still there. So when you look at it in those numbers, how much the actual individual U.S. taxpayer is on the hook for. And don't tell me that, we'll just do a billionaire tax or something like that. There's not enough money. Even if you take all the billionaires, you don't have enough money to pay off this level of debt. And we're still racking it up. That's an important thing to remember. Even if some one-time tax did take care of the $29 trillion debt, which I don't think is even remotely possible, even if you could do that, you're still running massive deficits, and it doesn't really fix the problem, because the problem is that we have an unsustainable system that is just accumulating more debt endlessly and at increasing rates. So again, guys, let me know what you think. Are you still stacking, or are you guys getting fed up with the action and the price of gold and silver and you're just going all to paper? Who knows? I would love to hear what you guys are doing, though. Let me know what you think. Thank you all very much for watching. If you guys want to check out some more videos about gold and silver, then check out these videos right here, and I will catch you next time. Smart Silver Stacker, out.